Something surprising is happening for the Pump.fun ecosystem, and as an extension to the Pump token itself. Suddenly, activity is going up again. We used to have initial growth, then a contraction, and for whatever reason, things are reviving again. Is this potentially an opportunity to buy now Pump on the low? The Pump token has crashed a bit. Does it make sense now to buy at those lower prices? We're trying to answer that question in this video. What we see over here is the number of deploy transactions on the Pump.fun platform. We grew up until the beginning of the year and then crashed down. But have a look at what's happening since beginning of the month. It's suddenly coming back up again. Is this the start of another rally? That's the big question of this video. Now, this is not the first video on the Pump token on this channel. Initially, attention was very high, then it gradually declined, and also here, in the number of views on the Pump token on this channel, we see a resurgence again. Have a look at the very first Pump video. It outperformed the average video quite a bit, right? So the average video is this area in gray, and this specific first Pump.fun video is the line in blue. It was published 36 days ago. Then another video followed. Here the blue line is already getting closer to the gray area. Another video followed. Now we are scratching the upper end of the gray area. And then this video even underperformed the average video in terms of views on this channel. But here's what I mean. The last update published 2 weeks ago, it started to slightly outperform again. A very similar trend to what we're already seeing with the deploy transactions shown at the beginning of this video. Things seem to be recovering. The Pump token clearly lives in a world of its own because it's technically not a meme coin, but rather a launchpad token. And when we just compare this to other meme coins, it's at number 8. And that's in terms of market cap. So it's got $1.2 billion worth of market cap. And just have a look at the price development in the last 7 days. All the other meme coins went down, but the Pump.fun ecosystem token tended to go up. Things seem to be truly stabilizing. What we see over here is the Pump token relative to Solana. So we look at relative valuations here. The reason why we want to look at relative valuations is because, first of all, the price discovery happens versus Solana, right? So we swap from Solana to Pump and from Pump to Solana. So there's a direct coupling of SOL to the Pump token. But also, secondly, there's opportunity costs, right? If we buy Solana or if we buy Pump, we need to get more performance by taking on more risk, especially because the assets are so highly correlated to one another. And so we don't look at Pump in US dollars, we look at Pump relative to SOL. And initially the token was its own pump and subsequent dump, as happened to many of its ecosystem tokens. This is a decline from top to bottom of roughly 70%. But since the end of July, beginning of August, things are coming back up again. Now, why did that decline over here happen in the first place? It's because of tokenomics. Or maybe I should rather say the anticipation of an expanding token supply. So the Pump supply itself hasn't yet expanded, but there is a possibility that it could very soon. So here's the number of circulating Pump tokens over time, and the team has already announced that it doesn't want to do the airdrop as early as indicated on this chart. They might wait with the airdrop for a while in order to stabilize the price. But again, in general, we are currently at 430 billion Pump tokens, and this can go up all the way to 1 trillion. So a 2.5x in terms of supply expansion. And the critical data point is over here, July of 2026. This is when the insiders, the team, the early investors get their allocation and can finally sell off their Pump tokens. I will, of course, make a video at that time as well, so feel free to not miss that. I publish videos in general regularly on Pump over here. Feel free to subscribe. Now, it's interesting that the trading of the Pump token itself is declining on the Solana chain. It's declining so much that it isn't even part of the trending tokens on Solana anymore. This is the list of all trending tokens on the Solana chain ordered by liquidity, and Pump is not part of that list. However, what is important to point out is that Pump Swap is the most active decentralized exchange on the chain. It's more active than Radium, it's more active than Orca, it's more active than Meteora. And so the Pump token is obviously traded on Pump.swap, and over there it is the most liquid token. It's got 16.5 million worth of liquidity, and that's followed by Troll. Now, if you've been following this channel for a while, you heard about Troll early. Have a look at this. There was this video published 20 days ago. It underperformed the average video. Another follow-up video. Again, it underperformed. Here's the third video. It underperformed. Nobody is interested in a token when it's still relatively small, when it's still quote unquote a hidden gem. And that's a kind of conflict of interest we have as YouTubers, right? We want to talk about the small things, but we can't necessarily do that because it doesn't get rewarded by the YouTube algorithm. What gets rewarded is to talk about Bitcoin, Ethereum, and Solana. The upside for those is of course also not too bad, but for those smaller additions to a portfolio that might grow very quickly, YouTube doesn't reward that. But yeah, have a look at the price of Troll when it was first discussed over here. It was at 3.7 cents. Now we are at 17 cents. So I really believe that crypto is not just a game of luck, it's a game of luck and skill. And the more we learn about on-chain analytics, the more we learn about who's buying what, the earlier we can pick things like Troll. But this is not a video about Troll, this is a video about the Pump token, and have a look at how little activity there actually is. In the last 24 hours on the Solana chain, we only saw 273 wallets interacting with the token. There were more buyers than sellers, 61% buyers versus 39% sellers, yet the price barely moved. Pump Swap clearly sees a lot of adoption, as in the total value locked over time is going up. There's more and more capital in the platform. But the Pump token itself has only 66,000 holders on chain. And the activity is somewhat slowing down. On the left side, we see the number of first-time users versus returning users. On the right side, we see the number of token transactions per day. All this data comes directly from the Solana chain. So we're just looking at the activity on chain. We are ignoring what's happening on the centralized exchanges. But in general, the trend is clear. There's not a lot of new investors coming into the token on the chain. Here's the trading volume over time. Again, at launch, there was a lot of hype, a lot of trading, and that now slowed down massively. There's more and more small retail investors buying into the token, relatively speaking. At least the trading volume is now made up more of small retail. But the on-chain trend is clear. What we're seeing here is the number of retail investors versus the number of whale investors. So we're looking at how many tokens are held in a particular wallet. That's 300,000 tokens for the chart on the left, 3 million tokens for the chart in the middle, and 30 million tokens for the chart on the right. So that equates to $1,000, $10,000, and $100,000. We can see that the accumulation has pretty much stopped for all wallet cohorts. Yet the pump price was able to outperform Solana by 43% from the bottom at the end of July. The reason for that outperformance is short-term capital going into the asset through the perpetual futures, through the levered bets on the price. Most people that bet on the pump token via the perps, they tend to bet on rising prices, as in the funding rate is positive, the longs have to pay the shorts in order to get more price exposure. So that's what we're seeing over here. The funding rate tends to be positive. This is green most of the time. The open interest initially went up sharply, then came back down to normal levels. And the big question is, what's going to happen going forward? Are we going to see more or less open interest? In general, given the size of the Pump ecosystem token, with roughly 1.2 billion, 500,000 worth of bets is already quite a lot. The trading volume has not just declined on the Solana chain, it has also declined on the perpetual futures. So interest in Pump, at least from the short-term traders, tends to not correlate with the number of YouTube views or the number of deployed transactions that are recovering. It seems like at the moment the Pump token is in somewhat of an equilibrium. More longs get liquidated than shorts among those short-term speculative traders. However, I do believe that over time we will see more and more volatility, especially as we approach the unlock of the team. This token unlock, July of next year, will really matter. I think there might be some talk around a potential short opportunity. There might be more people betting on falling prices just before that unlock. And that could then lead the market makers to actually push up the price. They might buy up the supply and liquidate all those shorts, which not only benefits the market makers, it also benefits the internal team that can then offload for higher prices. So probably for the next weeks, we won't see too much activity around Pump, but by roughly spring of next year, things are likely going to change. There might be some talks around shorting the token. There might be a short squeeze, thus the price going up, and then the subsequent dump again, because the team is likely going to offload then at those higher prices. Until then, I don't think that Pump is that interesting of a token. I think it's better to trade tokens that already have an inflating supply, where we already see the unlocks, where we already see the underperformance, and we can then play the relative valuations. Now, I strongly believe that most people look at crypto the wrong way. Most people just follow their altcoins on websites like CoinMarketCap. They look at the US dollar chart. They look at something like Optimism, see it's going up, they're happy. Or they look at something like Aave, it's going sideways, it's not good, it's not bad. But really, the answer whether or not an altcoin is a good investment is always in relation to something else. And once we look at the long-term price charts, we suddenly discover something that most people aren't aware of. Most people don't care about the following phenomenon enough, and that is token inflation. Most altcoins have a very quickly expanding token supply, and this website over here, Tokenomics.ai, lists the token inflation of various altcoins. Have a look at this, for example, Apecoin. It started with 284 million Ape, and now, after just 3 years, it's at 908 million Ape. And have a look at how the price developed relative to the overall altcoin market cap. It was a complete disaster. And again, we're just looking at how does one altcoin do relative to the rest. Or check this out. This is Fetch AI. It started with 86 million FET token, and now it's above 2 billion. And again, here is the relative chart of Fetch AI relative to the overall altcoin market cap. So we're just looking at relative performance. Is the altcoin a good investment? And more often than not, when the token inflation is high, the answer is no. Let's have a look at a few more examples. This is DYDX, a decentralized finance protocol for perpetual futures that started with 10 million tokens and is now at 711 million tokens. So a 70x in supply. Surprise, surprise, the price is going down relative to other altcoins. Here's 1inch, another decentralized finance protocol, again with a growing supply, again the same chart. And I could go on and on. Here's Optimism, a very large layer 2 scaling solution on top of Ethereum, also declining constantly after its initial wave of adoption. The people that really make money in crypto are the venture capitalists and the insiders and the teams that develop the projects, that get the tokens, dump them on the market, dump them on the retail investor. The retail investor is left holding the bag, and that's why the altcoins tend to underperform the major cryptocurrencies most of the time. Bitcoin, Ethereum and Solana don't have too much token inflation. They don't have that much new supply hitting the market all the time. That's why they can keep their value to a degree, at least relative to most altcoins, especially the inflationary altcoins. And this is a very broad effect. Have a look at this, right? Bitcoin roughly doubled in the last year. But how many of the medium-sized altcoins doubled in the last year? Let's have a look at the altcoins at rank 300 to 400. So altcoins that are relatively small still, that might have upside potential. How many did more than 100%? The answer is 1, 2, 3, 4, 5, 6, 7, 8. So there's 8 altcoins that did better, and there is 92 altcoins that did worse than Bitcoin during the time. And the problem really is survivorship bias. There are a few altcoins that still perform well, but how likely is it that we're going to pick the needle in the haystack? Say the one token, the ACT token, that did 1,457%. When you're buying an altcoin, is it more likely that you're going to get this one, or is it more likely that you're going to pick a few of those red ones? The problem is especially bad once you've got a diversified altcoin portfolio, because then you're losing a lot of the gains even if you pick one right winner. My approach is to flip this exactly around. When most altcoins underperform, and especially the altcoins that are very inflationary, that tend to go down, I don't just stay away, I see this as market inefficiency, as in there's enough retail investors that still buy those tokens that keep the price comparatively high, and then we can bet on falling prices of those altcoins and make money as they go down. The problem again is still, of course, correlation, right? When all of crypto is going up, even the crappiest of the altcoins will go up to a degree as well. So we have to hedge ourselves against the macro. So we can basically flip charts like this. Have a look at Bitcoin relative to DYDX, or have a look at Bitcoin relative to 1inch, or have a look at Bitcoin relative to Optimism. The charts are all the same, and we can get exactly that kind of return. This is what I'm personally doing already for the last 4 years. And this is the result I got. Had I just dollar cost average into Bitcoin, I would have gotten the return with this gray line. But because I also bet on falling prices of the very crappy inflationary altcoins at the same time, I got the return in black over here. I'm sharing all the trades that I make, and I also opened a copy trading vehicle. The demand had been so high that I had to close it, unfortunately, but I've already traded with that for a month. And that month went very well. Annualized, we're already at 74%, and we had a maximum drawdown of the capital of only 2.6%. So this is very nice constant gains. Very much in line with what those charts here imply. Because again, this is not just random luck, this is not just timing the market. This is betting on the structure of the market because of the high token inflation everywhere that depresses prices. So I'm sharing all my trades, for example, over here on July 13th, how I've shorted WorldCoin. WorldCoin also has terrible tokenomics. And so the community simply copy trades, also comes up with own trading ideas, and there's real nice gains to be made. But what matters much more than the individual trade is of course the long term. I've done this for 4 years. I'm now doing this for the members automatically for 1 month. I'll continue to do this. I'll continue to share the performance here on this channel as well. I'm very confident in the strategy. I'm very confident that when you follow trades like this, that you will make money. And so here's everything you have to do. You just get into premium and you watch 2 videos. One of them being using perpetual futures on Hyperliquid. The other one being risk management with relative valuation bets. It's 1 hour in total of content. Afterwards, you know exactly how to set up trades like this. Once you have watched those 2 videos and you've joined the community, I will send you a direct message with my favorite trade right now. If you do not make money with that favorite trade in the span of the month that you signed up for, then I will refund your membership fee 100%, no questions asked. You will have premium for free. You can watch all the tutorials for free. I'm okay to take that risk because, again, some of those relative valuation trades, they simply go up very consistently without too much volatility. So here's the price for premium. It's currently $125 per month. Feel free to simply sign up, watch all the tutorials, learn everything, start trading yourself, start making your first profitable trade. If the first trade is not profitable, you get the money back. If you want to continue copy trading me, of course, then you have to sign up for a bit longer. But again, I do believe very much so, if you've got a crypto portfolio that's not just a few $100s, but a few $1,000s, you will make that money back very quickly. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. A link to premium pops up directly over here. Just click on that. It will lead you to the website. See you next time on YouTube, or see you in premium. Cheers.